Welcome to Market Matters. I'm Jonathan Gan, joined by two beautiful ladies, Nadia Hassan and Charlotte Chong. So, Nadia, basically looking at the CI today, I'm seeing that it started the week down, but looking at the Friday statistics, of course, it wasn't surprising.
It was a very bumpy week last week. We saw some good days, some bad days. But my question is, right, we're in the second week of September, and pretty much there's no new catalyst. Earnings season's already over. I don't know what else you're waiting for aside from maybe announcement in mid-September. But, you know, for me, it's approaching October. Markets hate October. They seem to be a bit cursed about it.
Yeah, the ghost of October seems to come out.
Exactly. So, but I think Charlotte has more.
Great, yeah.
Last week we mentioned about the US non-farm payrolls, and it increased to 173,000 compared with last month. It's actually increased, an increment, but lesser than consensus target of 200 over 1,000. This actually points toward an uncertainty of Federal Reserve whether it will actually increase its interest rates in mid-September this year. Now, when we look at the regional market, Asia stock market are actually tracking the Chinese market. When we look at the Asia regional market this morning, Chinese market actually opened quite firm this morning, but it dropped again at 5 p.m. today. Shanghai Composite and CSI dipped 2.55% and 3.43% after the national holidays, 4-day holiday last week.
Exactly. So do you think it's a lot of pent-up demand, guys? I mean, it's been a few days for trading. Maybe people got over their shock, but it still didn't perform as well as people thought.
No. When we look at other regional markets other than China, Kospi down as well, Hang Seng, Straits Times Index all down, other than Nikkei 225. Back at home, KLCI dropped again today, dropping 6.31 points lower at 1,582 points. And what this tells us is actually there's no fresh catalyst, like what you say just now, Nadia. No fresh catalyst, and we're just waiting for more announcement coming up. But at the end of this week, we are waiting for more figures coming from China, like retail figures, the trade figures,
inflation figures as well.
Inflation figures as well, of course. And oil prices fell again on Monday today. On firmer dollar against US dollar against Malaysian ringgit is actually at about 4.31, 4.32. Brent crude oil fell to 49.11 US dollar a barrel. Back to you guys.
All right. So Nadia, looking at our hot stock for today, right? We basically have a no-brainer.
Did we run out of things to talk about?
We did. We kind of did.
Well, okay, to be fair, it's a very quiet day in the market, so I'm not surprised that when we were discussing this came up.
Correct. So Malaysian Resources Corporation Bhd, or MRCB, is basically the stock of the day. We saw 20 million shares traded, and it actually came down about 1 cent to about 99 cents.
So the thing about MRCB is, I suppose the reason why we picked Hotstocks was because it doesn't really normally kind of come up. The LRT3 project, which was announced last week, and if you watch our last Friday's video, you and Suhi were talking about it. I think it's a sign of digested a bit in. But the feeling. But looking at MRCB, right, I think it's good for them. How can it be bad for them? Silly me.
I do agree, but construction companies in general are leveraged to the hilt. Gearing is almost more than 1 times for MRCB. And of course, the thing is that their earnings weren't too good as well last quarter. Looking at the company, of course, this is a positive for them, despite everything. It is. I think this goes to show that I think that the confidence for MRCB.
Oh, come on, John! You have to sit up and tell me before. You know, you're wilting yourself because it's like, do you not believe in it?
No, I don't, because construction companies typically their margins are very low.
You talked about gearing. It's normal to have high gearing. I mean, come on, these guys are infra companies. It's a good thing for them. But I was looking at analysts, some of them say it was a surprise. Some people said it was to be expected. Overall, good thing.
Like I said, I mean, the confidence in MRCB should grow as a result of these growing projects. But I'm beginning to think there's too much attention on the construction sector at the moment, because I looked at several research houses. All of them are saying overweight on the sector. So, I mean, is it getting a little bit too crowded? You know?
It's always been competitive. I mean, I don't know how else to kind of put it. This is a big contract win. For me, the only thing is uncertainty about projects and how they go through. But these guys have a track record to speak into themselves. Why not?
Right. Yep.